Hey everybody, and welcome back. Well, we mentioned at the start of 2022 that this is the year of the trader. Midterm elections, inflation, and everything else was going to cause a massive amount of instability. We've since had incredible declines, amazing rallies, and we're back in what looks to be potentially the beginning of another serious decline. So stay tuned as we cover off on stocks, cryptos, and commodities for the days and weeks ahead. See you very soon. All right, everyone. Well, welcome back to our Market Daily Close show here for the close, the 11th of April, 2022. Remember, if you like stocks, if you like commodities or cryptos, please subscribe and smash that like button if you find value in today's video, as we do cover them daily here on the channel. Let's talk about risk. Well, it was another day of risk off. Basically, anything to do with technology or semiconductors was sold. We had the big heavyweights, Tesla, Microsoft, Apple, Google, Amazon, and Nvidia really getting hit hard in terms of percentages. I mean, to have something like a Microsoft down 4% is not really a joke in this market. When we talk about financials, that was a sector we looked at from the bullish side on the weekend. Held relatively well. Technically, financials should do okay in a rising interest rate environment. However, as you know, it's not as simple as that. There are other problems on the other side. Let's now talk about how the actual day traded. So it was interesting because we watched the open. We obviously had our daily Monday live pre-market show, and we noticed something occurring in the morning, and it actually held true to the rest of the day. And that was that hyper stocks held better than you would suspect. In fact, if you bought them on the open, they pretty much closed exactly at the same point, and some were up, such as Shop, which is now announced miraculously a 10-for-1 split. I mean, is this just hilarious or what? Every stock that's doing poorly or anything to do with tech, I know what we'll do. We'll split the stock and make some money. Is that the correct strategy? It seems to be playing out here a lot. I expect more announcement splits as we go through this year. It just seems like the thing that most companies will try to do to support their stock price. So we had everything moving down. We had the Nasdaq ended up down 2.69 because the heavyweights got there, and the SP 500, which opened on the support, fell straight through that 4,450. And that was really the story of the day. When we talk about the sectors, as we mentioned, some of the more hyper stocky kind of sectors did better. So that's things like TAN and obviously, the Squares, the Shops, the DKNGs, those types of things. They actually held better than you would expect. And their big stocks, they were the ones getting hit. XLK, XLY, semiconductors, and even the energy. So there wasn't much up on the session, that's for sure. To put it in perspective, if you're a new viewer of the channel, remember sectors are where it's at. Rotation needs to be understood. And if you know that, you may not actually underperform the market. In fact, you may overperform the market by recognizing when the market is rotating into different areas. That's what the big guys do, and why shouldn't you be considering that as well? If you want to find out more, obviously we do have it in our mentoring classes. Let's talk about midterm years don't usually bottom until later in the year. So we've already discussed this idea that there's going to be probably a second dip this year. We always suspected that it would happen. Is this the time? That becomes the question. We hoped it would happen at the end of April. We're now almost midway through April and we're already falling, but we're back at the 4,400 on the SP 500. So intra-year pullbacks can be quite brutal. You'll notice the previous ones. After the first pullback, you often get a secondary pullback. The key here is, though, when you have the longer mentality, and that is what happens by the end of the year or the next year. Okay, 1 year later, wow, amazing returns. So does it pay to be an optimist? Possibly, even in the face of adversity. Let's talk about the core CPI print. So that's probably why the markets are looking so weak right now. We know this is going to be a big print. Consensus is 8.4%. Wow, that's the highest since January 1982, and the Fed's fund rate was 12% back then. Where are we right now? 0.5%. Where's the 10-year? 2.8%. The 5-year sitting around 2.5. So we have even some banks going higher than that, and they're going upwards of 1.3 over the consensus 1.2 here, which takes us to 8.6. So this is already expected by the market to be a horror show. If it is a horror show, how does the market interact with that? Well, that's the problem. You don't necessarily know how the market interacts with that. It's a problem with the news. Sometimes you might say, oh, I think it's going to do this, and then it doesn't. You say, yes, I knew that was going to happen. If you've done that before, put the comments down below. But realistically, picking news can be very, very difficult. Remember, there's algorithms and other things in the markets that know better than us what to do. If you think inflation is here to stay, we've already talked about this several times, that generally during stagflation, inflationary periods, there is one thing that is consistent, and that is usually commodities do well. That's why the market has rotated into metals, mining, and commodities all the way for a little while. If you're getting excited about being a bear, obviously that could have just been the return to normal, which is that quick rally here. And if we make a new low, we'll certainly need to talk about that very, very closely, because if we make a new low, markets tend to go towards a very key point. And I'm going to tell you right now, you may not like it. It is a weekly 200. Yeah, weekly 200 SMA can often be the next level if we make a new low. And if you put that on your chart, you'll see how much lower it is if that ends up occurring. Let's talk about SP 500 midterm election years. Obviously, our run here was hoping that we would go through April into May. So that is basically a run through this period. It is still possible. Remember, this is SP 500 stats, not Nasdaq stats. And the SP 500 is on the 50% fib pullback, running into still one of the best statistically likely upward months in the year. If we look at the calendar, this is where things get a little bit interesting. So we're basically sitting here leading into the Good Friday. On the day before Good Friday, the Nasdaq actually is up 20 of 21 days over the last, years. Now, you may look at this and say, oh, well, great stat, fantastic. But that's actually pretty crazy. 20 of the last 21 years before Good Friday has been bullish. If you see signs in the day trade, could that help you? Maybe it gives you a little bit of confidence along with the stats. I still think stats are worthwhile. And even if this April fails to be a rally, remember, it's about seasonality, and you've got to apply that with your technical analysis. If you do, you do get some clarity to be able to hold your positions, because you've got to ask yourself the question, how often do you possibly close orders early? Bringing in some kind of information can help us there. Let's talk about the VIX. So the VIX, the fear index, was rising. We had two drops. We had a long leg doji, and I guess we've got a decision made, and that is fear. Fear is back. And the potential here of the tweezers following through has not occurred to the downside. Interesting point, certainly something we're watching. Does it help us that much? Well, it shows us that fear is back in the market, at least for now. Now, with fear, generally we see a rise in puts. PCC is something we're watching again, the put-call ratio. Whenever puts go too high, usually that coincides with a market in capitulation. So remember, at the moment, we don't have puts incredibly high. They're kind of just higher than the amount of calls, and we'll talk about where they are soon. But yeah, a little bit higher here, and we'd hope, if you're feeling bullish, that this actually goes a lot higher, because the more puts in the market, the more likelihood that the market won't fall any further, and it will actually find some kind of buying pressure. Why is the market down so much? Well, a lot of it's got to do with the US 10-year. US 10-year is at 2.826. And if you look at some things like the FTSE or the ASX 200 or other markets that are more commodities and metals driven, they're not actually, or banks, they're not actually suffering that much. But the US, with its technology focused stocks, is suffering a lot. The US 10-year looked to be dropping in the previous session, and then just came out like massive bull again and just went higher and higher and higher. And I kind of expect this, and I think a lot of people out there do, that this is going towards that 3%. Now, I don't know if it does it straight away, but as we know, technology is susceptible to this. And even though it's been rising for a while in the face of technology going up, at some point that does crack the market. And that's what we're starting to look at. At least we don't have inversion anymore. That canary is at least gone. And when it stays up there for a short period, that can be okay. Let's move over to gold. So gold is doing okay. And I say okay, it probably should have done better. But the problem is it is susceptible to the 10-year as well, if you understand how gold works. So over here, we have the breakout of the series of lower highs. We've obviously got a breakout. We've got a test of the resistance, and it looks like gold wants to. Now, we've long argued that gold should be able to get back to the 61.8 fib, which of this bigger pull, so the big pullback back. That is still where we're aiming for. And at this stage, it still looks bullish and it looks okay on the charts. I don't think we'll go much more into it with gold, but it still looks bullish. Little bit of indecision here at the peak yesterday, but hopefully it continues up if you're in a trade like that. Let's take about oil. A lot of people are talking about oil. So oil did exactly what we expected. Came up, crashed back down. Obviously now we sit on support. Is this support strong? I think it's too early to tell whether it's strong or not. You do have previous support becoming resistance though, right around this level. And let's put a horizontal through just to show you what's at stake here. So we've got previous resistances that broke through, created the double bottom up. We've got supports that were formed off that after it fell back down. Then we have resistances again around that 98.50 zone, which have stopped the market. Now, if it rallies through, what intersects? We have supports, resistances, and a trend line down, plus a 50 moving average here on the 4 hour, all sitting around the same area. So if we're able to rally and break through, wouldn't that be more bullish for oil? And of course, oil is highly correlated with stuff like the US 10-year going up. So theoretically, oil actually might not do so badly. And if it does break through this area, very interesting. So that's something I think we bring into our charts and we start to recognize and really hone in on over the next few weeks from a technical standpoint. Let's talk about Tesla. So Tesla, I think, is showing us one of the big problems. And the big problem is really China and the Shanghai lockdown and what that means for supply. So remember, this is, a lot of people are saying it's inflation, it's this or that. To me, it's really just now we've suddenly got what a lot of people could see coming, which is a massive supply shock that's going to be coming into the market over the next few months. Why? Because if you shut down some of the major manufacturing areas, which looks like it's going to happen, that is going to affect supply. And we've already got a demand problem, which the Fed's trying to deal with. Remember, the Fed can't support supply, it can only support demand. So basically we have this issue where inflation's out of control and having more supply shocks is not what we need. And that's what the market's reacting to. Now, what happened with Tesla is it opened up around that 980. So that previous little ticks of support and resistance, it actually rallied to around 1,000, 1,010, hit the daily 20 moving average and sold straight off it. We've talked about this for a while. One of the key levels that we're looking at is that 945, 950. And based on where the market is right now at the time of this recording, that is the futures, that actually could be exactly where we open in the next session, around 945, 950. And depending on how it interacts there will be very interesting. Let's have a look at the options. So where are the options sitting? Well, unfortunately, the poor person over here that bought the 2200 plus option for the expiration this week, I'm sorry, you believed in Tesla 10K and somebody's video. It's not going to work out for you unless a miracle occurs. Same with this one over here. I don't know who places some of these positions, but they're pretty wild and they're certainly optimistic. Of course, most people got trapped at the 1200 strike. It makes sense. A lot of calls going in there, betting on a squeeze event. And right now, where do we have the puts? Where do the puts start to get higher? Around that 950 level to 900 level. So this is where we have what we call put walls. And put walls are just really a high amount or concentration of an option sitting right on a strike. Remember, that just means that if Wall Street doesn't really want to pay them out, that would be the perfect level for bounce. You use this mostly just to see whether your technical analysis is bouncing off that zone. If your system is, and you know there's a wall there, more power to you. It just really increases your odds a little bit. Then that's how you use it. It doesn't mean that it's guaranteed to work or anything. Nothing is. It's obviously based on just adding a little bit of complexity, a little bit of knowledge and extra information. Let's talk about Apple. So Apple is in the middle of nowhere land. It basically made its decision. It went, you know what, I'm going to short. And it shorted the entire day. And a lot of this can come down to the SP 500 if you're reading it. So really, we have a declining trend line that broke. It rallied. It went for 11 days straight, which I thought was, something I hadn't seen before in my career. Not 11 days straight. I think the last time it happened was something like 2003. And then it sold off, rallied. Obviously, at this point, we did think there was a potential for a new all-time high. Didn't break through to the new peak, unfortunately. And then now we're back where we are right now. So is Apple telling us much? Well, it's certainly not saying anything good. And if we look over on the weekly, of course, this is in line with some pretty horror kind of candles here, such as this double rejection wick. You don't usually ignore these too much. We've talked about that, and it seems to be following through. So on the surface, it looks relatively bearish here, Apple, and what we're looking at. It's hard to go against a stock like that, but it certainly doesn't look good. The Nvidia, very similar. Nvidia broke through, kind of danced around this area, came down to the 240, which we had as an interesting zone. It did bounce, never followed through. Remember, follow through is so important with making sure you get that confirmation. You can give up a little bit of percentage to get that momentum coming through. Didn't happen. Now we're coming down to a key level. That is the 210 support here for Nvidia. And we've got a lot of intersection between, previous trend lines, previous horizontal supports. There's a lot at stake, and you can kind of tell this on these markets. Same with the DAX. Is the DAX ready to go through? It's sitting at 14,000. We've argued that this is a very important zone for the European markets because it's kind of like where risk on, risk off occurs. It's hit it once, rallied, hit it twice, rallied. We're at the third time. Is it going to rally again? Time will tell. Certainly one that the bears and the bulls will be watching. And at this stage, when you're looking at it, kind of looks negative. But as you know, markets can do some pretty good things. If you are feeling bullish, where do you feel a lot more bullish? Obviously a breakthrough here, which we've argued is kind of risk on throughout the world. And especially if you're getting risk on in Europe, that's a good sign for most markets. So we do have a nice trap here and a nice coil set up on the DAX. Remember, the longer term DAX is actually a giant Wyckoff. So that is a Wyckoff distribution that did fail and already moved down. We were correct on that one. And right now on the weekly, again, can you feel bullish on the weekly? Not at this stage. It would mostly be bearish tinge. Same type of thing on IWM. We saw that slight rally in the morning through the smaller stocks and the little financials. And then all of a sudden it went down again. Some people are arguing that this is SOS. So that basically means that we've had the Wyckoff. It's now distributing down here, as in like it's coiling, getting ready for a bigger move. And if some of the big pundits out there are correct and we break underneath, we're going down here, but it could be really brutal. So we do need to remember there's a lot at stake here, a lot of very powerful forces. And at this stage, yes, IWM doesn't really look strong or anything. It looks more weak than strong, but it's not at a heavy anything in particular. So it doesn't give us that much information. Nasdaq sitting right now. Let's actually go to the US 100 futures. So you'll notice at the time of this recording, we're at 13,937. That's pretty bad. You'll notice we had here before the breakout, the pullback level, and that might be what the Nasdaq goes for. But I think it's less about the Nasdaq. The Nasdaq is the weaker market. There's no doubt. You look at this market, very weak, has been. If you find the signal on the SP 500, if your choice is to go with the weaker market, then of course you might say, well, I want to short the Nasdaq because clearly it's very susceptible to the yields. But the S&P gives us the better technical analysis zones, and it generally does. If you don't see clarity on the NAS, the S&P 500 will give you some further clarity on whether it's bullish or bearish. So we talked on the weekend about the coiling market. Let's go down to a 5-minute chart just to understand what actually happened here. And effectively, the market went from the supports to the resistances and it sold off. Now, why? Because as we mentioned, we had a peak, we had a trough, we had a lower peak, we had a lower trough, what we call the lightning bolt. The market then went down, it rallied, and it sold the rally. If it had breached through here, happy days. Bulls are incredibly excited about that. Would be great. And if it happens in the future, of course, I still think it's going to be great and that would be a benefit. But at this stage, every single breakdown seems to be being met by bearish pressure. So even where this market is right now, and I can tell you at the time of the recording, it's gone exactly where we thought it would be, which it breached through the 44.50, it closed underneath, and then it sold off to what zone? The 4,400. Of course, that makes sense. If it now rallies, what do we expect 44.50 to potentially be? Of course, some form of intraday resistance. So any rally right now is going to be met by, I guess you would say, skepticism and also some potential shorting. Because think about it. We just got through all of these moving averages. The 20, the red one, the 50, the blue one, and the 200 on the daily. All of these were meant to act as dynamic support. And it went, you know what? I'm sick. I'm going down. So the 38.2 was not good. It didn't hold. It didn't rally. 45.20, I'm telling you, if it broke through, would have been good, but it didn't. So now we're back at the last level for a lot of people, and that is the 50% fib pullback. So basically here, if you're feeling bullish, and we like to go through both cases, if you're feeling bullish, when it opens around here, is there a lot at stake? Yes. How many days of sell-off have we had? We're on something like the Nasdaq. We've had a lot of selling off days. So is it due for a little bit of a rip rally? Some people may say, yes, it is. It's due for one of those days where we go, you know what? The fear is starting to drive in. We rally it, suck some people in, and then of course sell it off. 4,400, 50% fib during the day, going to be very important. A break below this, again, just every single rip, we'll have to look to probably find the shorts. That's just what technical analysis is. You're going to have to flick the switch when it happens, regardless of April seasonality. We're getting to the point of absolutely no return should it get under these zones. And that just comes back to really recognizing the weekly. Do these weeklies look good? Absolutely not. They look shocking. And you can tell that on the chart. It looks bad. We talked about how bad it looked, and it's following through. So at this stage, most people are bearish. People are moving into those short kind of positions. We're at the 4,400, and I think you've got to keep an open mind both ways, because these are critical points, and you guys know that. Let's look at max pain for this week. Currently, it's actually dropping a little bit, so that means there's a lot of people are trying to go bullish still in options. So 448, it was 449 on the SPY, okay? So that's the SPY, 4,480 there. So it's down underneath where the max pain would be. Do we think it can get there? Certainly could, certainly could. Let's have a look at the open interest for this expiration coming up ahead of the public holiday. Well, interestingly enough, it looks like for this expiration, we have quite a lot of puts sitting around that kind of 440, 445 zone. So 440 in particular, it's actually a put wall. So we've just slammed into that before the market. Do we expect some buyers off this level? Well, that's an argument that you certainly can make if you're feeling bullish in this market. Let's move over here to Bitcoin. What's it telling us? Nothing good, really. I mean, Bitcoin traders will be pretty unhappy because not only has it broken through all the key supports, that is the first support here, which I think a lot of people would have got stop lossed here. And hopefully if you do trade with stop losses, you'd be out of it and being able to make a better decision. We had the second level, which is here, and now some people are going to draw this trend line and say it's do or die for Bitcoin. I kind of agree with them because it is, of course, a risk on, risk off asset. Some people are now arguing that this is a giant flag. That is, basically we have here the top of the flag, the bottom of the flag, there it is. And if you extrapolate out the pole length and you think about the timing that we're in, which is obviously, you know, last time it was the crypto winter of 2018. This time could it be 2022? Same kind of style of market, really, midterm year, etc. Well, if you extrapolate that out correctly, it actually brings you down to 3.5. Now, that would be pretty scary. So let's go with just the top. That's about 12, back into the previous peaks. That's what people that are bearish on this market are calling for. And that's super bearish. And I don't know if you can call that yet, but certainly that's what people believe. And then, of course, they're looking into the next halving event. Remember, in Bitcoin, it's all about halving. Never forget that. When the darkest hour of Bitcoin occurs and the halving is coming up and no one's talking about it, it's like 2018-19. Maybe that's the time that you want to strike in possibly the best coin in the market, just because, of course, it has that longevity in it. It's like the index. Let's take a look at Bitcoin shorts. Yes, they're back in force. They've really pumped the shorts in the last 24 hours. If you were watching this and seeing that improvement, possibly that was your telltale sign to say, you know what, I need to be protected here in the market. But yep, Bitcoin shorts is rising. And of course, if this continues to rise and we see rallies in Bitcoin, you know what that's going to mean? It's going to mean probably a short off, because remember, who wins, the whales or us? Usually it's the whales, and the whales come out to play. Ethereum also losing some ground here, but actually performing a little bit better than you'd expect. We've talked about Ethereum being stronger than Bitcoin recently, and you know what? As a ratio, it has been. It bounced heavily off this last point of support, and people are still buying Ethereum at a higher rate than they're buying Bitcoin, and at least that component has held true for at least now. So that's important there. Let's move over to Twitter. If you haven't already followed us, definitely consider following us over at FX Evolution on Twitter. And remember, there's some big news here. Core CPI coming out 8:30 a.m. That is 1 hour before the market opens. I'm sure the futures will have fun with that one. And then we scroll through and we've got PPI on Wednesday, which we knew was coming. Unfortunately, all this news matters nowadays. A whole bunch of stuff for Europe coming out as well from the central bank, etc. ECB press conference here, 8:30 a.m., coupled with core retail sales. So what a week of the American consumer, and whether we've got runaway inflation. I'm telling you what, it's going to be one of those very interesting weeks. I think we'll probably find out whether the market has any rally left in it. And at this stage, most of you are probably starting or have already been shorting this market. And fair enough. If you've been doing it in the intraday, I don't blame you at all. Thanks so much for watching. If you enjoyed today's video, please subscribe, smash that like button, guys. We'll see you in the next one. Bye for now.